to another Property Tribes TV interview, and this is a very important one for people involved with furnished holiday lets. And I'm joined by Amit Prasanna of G&P Accountants. Welcome, Amit.
Thanks very much.
Now, you're based in London. Tell us a little bit about your accountancy.
Sure. G&P, George Owen Prasanna LLP. We have offices in London and Cyprus. We've established about a year ago, focusing mainly on accounting and tax services for high net worth individuals and property investors. The background is I myself have been in the city quite a few years. My partner, who runs our Cyprus office, is a property developer. We got together. We both have a very strong interest in the property side and services for landlords, and that's what we provide today.
Brilliant. Now, we're going to talk about something very interesting to do with a tax angle on furnished holiday lets. But first of all, we need to establish the difference between a furnished holiday let and a standard buy-to-let.
Yeah, it's a very important distinction to make, especially from a tax perspective. Most investors or landlords who own a property that's let out will assume it's a buy-to-let property, i.e. you receive your rent, you incur expenses, you make a profit or a loss, and if you have a loss, it's carried forward. From a tax perspective, a furnished holiday let is treated very differently. It's actually treated as a trade rather than a property for tax purposes. What that means is you get certain allowances that are more beneficial to an investor who makes a loss on that trade. The rules have been changing, but essentially it's the loss treatment that is different for a furnished holiday let than it is for a buy-to-let.
Yeah, it's hard to keep up actually, because the successive governments have sort of kept changing the game, haven't they?
It is. You've got governments and you've got the EU rules coming in and out, and it does get confusing. Most people wouldn't know what the rules are if you ask them, and that includes several accountants. In our experience, many accountants aren't aware of the rules for various reasons. So it is good to either contact us or accountants and make sure that your property is being treated in the right way. Because
you've established that there's a window of opportunity, and we're talking up until January the 31st, 2012, where in certain circumstances you can claim back capital allowances as well as losses on an FHL. This is not widely known. Am I saying this right?
You're saying it correctly, broadly. I mean, the capital allowances part really goes hand in hand with the aspect of treating a furnished holiday let as a trade. In trades, you're allowed capital allowances on certain equipment and items that you use as part of the trade. Plant and machinery being the typical type. The window of opportunity exists because as of 6th of April 2011, this year, the rules have changed so that the loss reliefs that were there previously no longer apply. What that means is, for your tax return for the year ending 5th of April 2011, you have until 31st of January to submit your return and make a claim for any losses that you incurred. 31st of January 2012 is also the deadline to make any amendments to your previous year's tax return, which is for the year ended 5th of April 2010.
So we are talking about quite substantial amount of monies, because you have been doing this for various clients, and you're now working on my one for me, my Cyprus holiday let and my UK holiday let. So what sort of sums of money have you been able to reclaim?
Well, it really depends on the individual property and when they bought it. Vanessa, for yourself, if I can say this on camera, you bought your property in 2010. Yeah. What that means is you had the losses you incurred on that property, which includes capital allowances, can be carried back several years from that date. So you don't just get the benefit of offsetting losses for that particular year against your other income. Any surplus losses that you have can also be carried back against other income you generated in previous years. So the loss relief that you get can be applied over many years. So you could be entitled to a tax refund or a tax rebate for many more years than you actually expect.
Right, that's good news. Thank you.
Very good news.
And I wanted to share this with everybody watching, because this is a time-sensitive thing. You've got to get your tax return in by the 31st of January to benefit from this. And if you do, there's a very strong possibility that you could get a substantial rebate. And your service, Amit, you are offering this on a kind of no-win, no-fee structure. Explain how that's...
It would be akin to that. We're not looking to replace anyone's accountants by any means, unless they want us to, and we'll be happy to do that. But as a one-off service, we specialise in this area. We know the rules, we know the ins and outs. We've corresponded with HMRC on this on several occasions, and the service we offer is quite simple. We can be engaged to make the claim on your behalf for your furnished holiday let. We'll work hand in hand with accountants if you need it. If you don't have an accountant, we can do it. Provide a fuller service for you if you require. Our client that we've just recently finished has accountants. We're very happy. They've been with their accountants for 20 years. They've engaged us to do a one-off exercise on this particular topic, furnished holiday lets, and we managed to get the gentleman back approximately £26,000 in tax that he didn't know he was entitled to. His accountants were very happy. It's important to understand that people shouldn't assume that their accountants already know about this. Often they don't. And like I said, we're not looking to encroach on anyone's turf here. It's literally to make sure that people get the maximum value they can out of their furnished holiday let.
Absolutely. So there are 3 criteria really that people need to meet before they pick up the phone to you. Just quickly revise that.
That's right. And it's a very important point, Vanessa, because to qualify as a furnished holiday let, properties have to meet certain criteria. The most key criteria are it needs to have been let out for 70 days or more in a year. It needs to have been available for let for at least 150 days, and you typically wouldn't let this property to any one person or tenant for more than a month in the year. Obviously, and this only applies to properties within the UK and EU area.
Brilliant.
So if you have any North American or Asian properties, they unfortunately don't work.
And you have to have paid UK tax.
Well, yes, so you can't get a tax rebate if you haven't paid taxes, unfortunately. So, yes, if you paid taxes and you've made losses on your rental property that qualifies as a furnished holiday let, you could be entitled to a rebate.
Brilliant.
In fact, you probably are entitled to a rebate.
Oh, happy days. Good news for any holiday let owners that meet that criteria. So just really wanted to share that with everybody because, we love it when we know that we could possibly get a rebate on that nature. So it's important to let everybody know about it. So that's Amit Prasanna from G&P Accountants in London, and I'm going to put Amit's contact details on the screen. And if you'd like to get in touch with him, you'd love to hear from people, wouldn't you?
Absolutely.
Thank you very much for talking to us and sharing that with us. Really, really interesting. Thank you very much for watching this important interview about possible capital rebates from tax on furnished holiday lets.